I don't consider myself a salesperson. I consider myself an educator. My job is to help and then help. One out of every, you'll file a homeowner claim in your lifetime about one every 10 years. You'll file an auto insurance about one every 18 years, unless you were in an accident this morning. But here's some staggering health statistics. 1 out of every 2 men will be diagnosed with cancer. Look around the room. 1 out of every 2 men will be diagnosed with cancer. 1 out of every 3 women will be diagnosed with cancer. That's going to be an important statistic for you in a bit, and you'll understand why it's going to be impactful to you. 1 out of every 4 seniors will have an accident that leads to injury. And our expenses go up, right? Yeah. And let's face it, we're all going to pass away from this life. Death is 100%. Everybody who's ever bought a life insurance policy will use it. One out of one have a chance of dying. Those are scary statistics, but there are some ways that we can overcome that. So let's move on to the next slide. We'll talk about the plan and the 4 valuable key parts of it. The first part is we'll have a shared plan, to marketplace insurance. I know that some people have an individual plan. There's all kinds of options. Just have to ask and learn and educate yourself so that you can make good decisions. And then there's part 2, the ancillary product, known as supplemental product, voluntary benefit. All of that will help play a key role in how financially stable you remain after a medical crisis has happened. So that's another important component of it. It's not just fluff that somebody's trying to sell you. And then part 3 is the protection. That is your life insurance, that's your living benefit that help pay for long-term care. And then there's a 4th component that I think is really, really important. There should be one more slide. That is the wellness program. I just stumbled into this in the last couple of months, and I'm very excited to talk about that with you. You've heard me talk about that in my 30 seconds or however long I have each time we get together. But that's another component that is, I think, really great benefit for group to consider. Anyway, those are the different parts of it. So if we go on to the next slide, Tim. And talk about the medical plan first. So what does the medical plan not cover? Because we're talking about gaps today, and you're welcome to participate. So what do you not have in your medical plan? You got cheap cheap right above my head.
Dental.
No dental. There's no vision in a medical plan. There's no hearing. There's no long-term care. There's no hospice room and board. That was a shocker for me. There's no travel. It doesn't pay for anybody to travel with you when you're sick. There's no cosmetic or elective surgery procedure. You have to work with your doctor to make it be a medical situation. It doesn't even cover massage therapy. I have to pay that out of pocket too. It doesn't usually cover bariatric surgery. It doesn't even cover compression socks, y'all. So when they bring you those socks into your hospital room, or your doctor says you need compression socks, he's not telling you how to pay for it. Because your insurance doesn't typically cover it unless you're doing a home health round on that. So, okay, so we go to the next slide, Tim. I want to talk about these terms a little bit, because most of us know what a deductible is, right? Anybody in the room not know what a deductible is? How many of you have a high deductible? Crazy. Okay, you know what a copay is. That's what you have to pay when you have something done in addition to what the insurance pays. Co-insurance. This is something a lot of people don't understand, but you've been doing it for years. Your parents did it. For example, when you were a child, because it doesn't happen in our lifetime now, your parents probably had group coverage through their job, and they covered 80% and left the 20% for your parents to pay. That's co-insurance. That 20% for co-insurance. In today's world, our co-insurance is oftentimes closer to 30 and 50%, especially if you're on the marketplace. So understanding what you're buying is critical, because the price may sound good, you can live with the deductible, but oh yeah, that co-insurance is going to sneak in on you. So that's an important factor that you want to be aware of. But the most important number you want to know in your insurance policy is MOOP, your maximum out-of-pocket amount that you have to pay. Because if your deductible and your maximum out-of-pocket are the same, sometimes that comes out to be less expensive because you have a high deductible but a lower premium than if you have a higher premium with a lower deductible. And oftentimes your max out-of-pocket is still the same. So that's important to know. You also need to be aware of anything that's not covered or included in that max out-of-pocket. So sometimes they have certain types of cancer procedures they only pay a percentage of. So that leaves you with the co-insurance of the remaining. Again, that's why knowing your statistics about cancer and having some additional insurance to cover that cancer insurance is going to be really helpful. You have to know who your doctors are. You need to know what your prescriptions are, so that you can make sure you're on a plan that covers that. How horrible would it be if you found out that your favorite doctor wasn't in network? So be sure you help educate your agent about that, whether it's me or whoever. So, and then it comes down to, what can I afford? Can I afford not to have it? I had a lady call me yesterday who is on a budget, and her CPA told her that she was going to have to pay a lot more in taxes because of the subsidies she's taken out on the marketplace. Now it's unaffordable for her. But can she really afford not to have some kind of health insurance? So those are all kinds of things that you want to work through with your agent to make sure that you get the coverage that you need. So in the next part, I want to talk about part 2. This is supplement. That leads right into where I want to go next. So, and when you work for a company, you were probably offered some voluntary benefits, such as accident insurance. You may have been offered a cancer policy, and I strongly encourage you to get that, at least $10,000 worth, because that's what most people's max out of pocket is. And that will help cover the cost of things that the insurance medical plan doesn't cover. And it gives you some flexibility to not have to go in the hole in your financial plan. There's critical illness, there's dental coverage, vision coverage, disability. If you're also working for a group, I encourage you to get in a disability plan if you can. Let me tell you what disability does. It pays you when you're not able to work at least some percentage. For most groups, it's 60%. And most people are living paycheck to paycheck. So having that, even if it's 60%, having that coverage will help you not go in the hole financially. Okay, we'll go to the next slide. One of the things that's important about life insurance is know the different products, term versus permanent. Some of these questions I meant to change the slide are geared toward a business owner, so I apologize. But how much coverage do you need? How much coverage do you need to pay your bills? If something tragically happened to you, how will your family live? I can tell you from personal experience that when my husband died, I was exhausted mentally and physically. The thought of thinking about that if I had to get out the door and go to a job and work without a break for a few weeks was crippling, because I was so exhausted. And that's something that most people don't consider. Even if you didn't know the death was coming and it catches you off guard, grief does funny things to people and they need time. So if you leave fun for your family to be able to continue living at least for a year after you passed away, then it helped them to be able to stabilize. Because when a death occurs, it shakes up the whole family. It affects every aspect of your life. Some of you know that from personal experience. Some of you have watched that. So the key question to ask yourself is the life insurance coverage enough to fund your family, to protect your family? You're not always insurable. So if you buy term insurance, it has an end date. Will you outlive that? We don't know. I don't have a crystal ball that tells me that either. So he doesn't flash down to me and tell me this person's going to live. So it's important for you to think about that and get permanent insurance while you're physically able. So there's lots of options that we can talk about. You can do it through an annuity product. I walked into a financial planner's office the other day to take a little happy, thanking him for a referral that he had given me. And he started talking about annuity. And I knew exactly that product that he was talking about. It was one that he thought his parents needed to have. And I said, "Oh, are you talking about?" And I named a carrier, and he said, "Yeah, you know that?" And I said, "Oh, yeah, I offer that. I just closed one." So it's important. It's important. Your insurance broker may know more than just one little aspect of insurance. I'm a full-fledged broker, so I can literally take you through the gamut. And then I'll tell you if you need to take something to somebody else, such as a financial planner, you also need to have a CPA, because that CPA can help you guide you tax-wise so you don't get in trouble at the end of the year too. But there's lots of options with insurance, lots of options with life insurance particularly. So next slide, Tim. Thank you. We've got 4 out of 10 who would immediately have financial trouble if they don't have sufficient life insurance if somebody passed away. 7 out of 10 would be in trouble in 90 days. Most people live paycheck to paycheck. So I'm going to ask you, and you can ask your friend, what changes would your family have to make if you passed away? And y'all, I'm sorry, but a GoFundMe is not a funeral plan. It is not a funeral plan at all. It breaks my heart every time I see one, especially when it's been someone that I talked to and they turned me down on doing something. It didn't have to be that way. So how will your family pay bills? How do you want to be remembered as that person who took care of their family or not? That's what it boils down to. I also wanted to just go into the wellness program for just a minute. That's the 4th component. So Tim, if you go on to the next one. I've been given 5 minutes time. So I'm going to have to go back. But most of this is pertaining to a group. Anyway, talk about, I wish I could offer benefits. Hopefully it'll make you go, "Oh, I know we can help you. I know a way you can do that," and save money for your company. For the employer, it reduces his payroll tax about $550 a year per employee. If you got 10 employees, that's $5,000. That's pretty steep for a small business owner. And of course, the more you have, the greater it is. So the average claims reduced about $1,400 a year on a 3-year period, and it doesn't affect the employee take-home pay. For the employee, they get more benefit without it affecting their bottom line. This is legal. I promise you, it is totally legal with the IRS. This is a way that for folks who are involved in a group, a company, can have some extra benefits and some extra perks. It includes, if you go to the next slide, Tim, it includes counseling, life balance, legal, financial, etc. All of this can be done when the employee is maybe sitting at their desk and they don't have to leave work. It can be done after hours. They can involve their family in it. There's a lot of things that will help save them money and you money in the long run. So it's available 24/7, 365 days a year. This day and time, that's pretty important, $0 copay, right? Okay, and Tim, if you go to the next one, this is just an example of for a large company that had about 1,200 lives that were enrolled in the program. 42% of the company enrolled in it. It saved them in healthcare savings $223,000. It saved in absenteeism $59,000. That's a huge chunk of change for a company that you don't have to figure out how you're going to cover the shift or how you're going to cover the work that person was supposed to be doing, resulting in a total annual savings of $283,000. Not to mention the retainment that they offer that led that employee to stay here because they have benefits, they have things to offer them. So without anything further, I don't have any more slides to cover other than the opportunity to ask questions. I know I explained that so well, you don't have any questions. Tom?
I'm going to be a testimonial for you. I had a 25-year term policy. I had a personal disability policy that I bought in my 40s because I couldn't answer the question well. What would you do if you couldn't work for a year? I've never been burdened with wealth, so I couldn't answer that question. So I went ahead and did those things when I still had 2 young kids at home. When I was 63, I'm diagnosed with cancer. So I survived that. And now I've got this convertible term policy where I'm uninsurable now. So I go back and convert everything I can from that term policy at the highest health level possible, which is where I was when I bought it. Also, there's something called waiver of premium. While you're on claim, don't pay for these insurance products. And the other thing was disability. I would be bankrupt if I didn't have that personal disability policy that stopped at 65, and I used every minute of it because that's right when the end of my treatments were. The point is that these products work. They really work. They saved me and my financial foundation for my family. And I would highly recommend the younger and the healthier you are, do it now.
Amen. Thank you. I saw Troy's hand up while I want to go at the same time.
Okay. What I was going to say is I see there's some changes that the president has made regarding bringing down drug costs. Is that going to affect your business at all, or our business as far as premium bill?
I don't know the answer to that yet. It has already impacted me because many of the carriers have stopped paying commissions to brokers for writing the prescription drug plan for Medicare. But it doesn't mean I won't help you. I just don't get to be your advocate for you.
Just a quick comment on long-term. When you buy long-term care insurance, it is a gift to your children. And again, like Tom said, the younger, the healthier you are. The other thing, if there is money in the coffers to take care of you when you need help, the money's there. You're not going to have to pick out the cheapest place to live because you thought ahead and planned for your family.
Definitely. And there are some options that we can do now. Let's talk to me about that. I know Pat had her hand up and then we'll stop.
Yeah, basically I just wanted to say thank you, Genell, for helping me. I went for years without any insurance at all because I had an uninsurable condition. And through it, it is the most complicated thing I have ever seen. And why they would make something that complicated for people who are getting to the point where they're having difficulty understanding things makes no sense. But then it's a government program, so that makes sense.
Thank y'all again for allowing me to speak today. Thank you, Mary Lou, for inviting me. I hope that you learned something today and that you'll share that with somebody else who needs help and think of me. Y'all have a great day.